Hello, this is Manash Patel with IMTF Trade. Today we're going to sit there and teach you another strategy. This is a great strategy. Why? How do you know when institutions are accumulating a particular instrument? That's a magical question. A lot of people use proprietary indicators or proprietary systems to do that. You really don't need to do that at all. Because if you think about everything from a high level, you could determine all this from pure price action. And we're going to show you exactly how to do that. And then what you can do is you could increase your probabilities with success by looking for what we call multiple time frame supports, which we do. So I'm going to show you all that in just a moment. Why is that critical? Well, it's critical because you want to sit there and trade with the big money. And that's exactly what we're going to do. I'm going to show you. So before we begin, let's go through our normal disclaimer to state this is for education use only. We're not soliciting you to buy or sell any particular instrument. If you're doing so, you're doing that at your own risk. All information is owned by EII Capital Group, cannot be copied or distributed without our written permission. We are broker neutral, so we support all the various charting platforms out there. Today, we will be using TradingView to show you the chart. So let's go and look at a live trade that we took and the reasons why and the thought process behind it. Okay, so this is what we teach in our options class, and I want to show you this strategy. So here is FAST here, F-A-S-T, and this is daily time frame. Now there's many different ways. A lot of companies, a lot of education firms sit there and talk to you about how you could sit there and determine when institutions are slowly buying. Well, the key thing is, why are they slowly buying? Well, if you're sitting there trying to buy like 1 million shares or 2 million shares of a particular instrument, you don't want to sit there and buy all at once, because if you do, you're going to change the price and you're really not going to get filled at a good price at all. So the average cost for that particular instrument, if an institution tries to buy it all at once, is going to be huge. So what institutions try to do is they'll sit there and try to buy that instrument very slowly with small position sizes so it doesn't affect the stock price at all, and they could get filled at a very good price. And that's what the key thing is how do you sit there and determine when these institutions are trying to do it underneath the radar that they're accumulating. And that's what we're going to show you here without using any proprietary indicator. It's simple, believe it or not. So let's go through this concept. First thing I look for is I look for a catalyst. Here is earnings. That's what I'm looking for here. You could see our earnings here basically gapped up. So I'm looking for a gap situation on earnings. If it's not gapping, then it's not fitting my criteria at all. Okay. So I'm looking for a gap on earnings. Second thing I do is I look to see exactly what happened with this gap. At this gap here, the day before on this gap here, and this is a daily time frame, you could see there was a multiple time frame resistance. These crosses are multiple time frame resistances. So that was holding this thing down. Not only that, you have a pivot here. So you could see that when this gapped here, we broke this pivot and we broke that multiple time frame resistance here. So we broke majority of all these resistances on the day of earnings, which is good. Not only that, we sat there and we closed higher above all these levels, and we closed higher at the end of the day. That tells you that many people did not profit take. And that's the first sign I look for based on pure price action. So this gap bar here fit the criteria that I'm looking for, that tells me there's a possibility of institutions getting ready to accumulate. Okay. Now, once I know that, then I'm going to surround this bar with alerts. So I'm going to have alert at the high of the bar, alert at the low of the bar. Okay. Once that happens, what I'm looking for is price to close outside one of those alerts. Here it closed outside alert. That tells me this is a situation where it could be a gap and go. That means the institutions are getting ready to accumulate this instrument even more. And if you think about it, this thing here gapped 5%, 6% up to here. Now, if it sits there and still wanting to keep on going up, that means there's more reward there for you to accumulate. And the only reason why there's more reward is that institutions still believe in this, and they're still buying this and not allowing it to go down at all. Because if you think about it, if this thing's moved up 6% up to this point here, why are people not profit taking? People are not profit taking that much at all because they believe in the instrument, and that's what you're looking for. So here we close above it here. That basically that tells you that this is now bullish. So now next bar here, you could sit there and enter this trade. There's two ways you could enter. One, you could look for bullish setup on the lower time frame, is what we call a confirmation trade. So for us, with our system, we'll look for a green shaded area, which tells us there's a bullish setup on a lower time frame. Okay. Or two, you could sit there and try to take the trade from here. Okay. If you look here, what we're looking for here on the second day is it having a cross here. On the second day, if it has a multiple time frame cross, that tells us this has a high probability of being accumulation. Why? That tells us all the other time frames are still thinking this is bullish. Not just the daily time frame, because if the daily time frame did not have this cross, that tells you the daily is thinking bullish, but does not mean everyone else is still thinking bullish at all. By having that cross there, that's telling us all the lower time frames and time frames above me are still thinking bullish. Everyone's still thinking the same support level, and this now has potential to go up. Okay, so on this bar right here, I could sit there and enter that trade, or I could sit there and wait the next day and enter the trade because it's still going to be around here. But the key is I'm looking for this cross here, which supports and confirms that this still wants to go up. Okay, that's the difference between us and everyone else. We're not using any proprietary, we're not using any proprietary indicator. What we're doing is we're just looking for multiple time frame supports, and that's exactly what we're getting here. You could do it manually, or you could do it with our indicator, which basically tells you where all the multiple time frame supports are. Okay, so here you could enter here, or next day you could enter here, and then you could sit there and ride this thing up. Now, one possible entry, as I told you, you could go down to a lower time frame. Another way you could do it is just sit there and look off this time frame. So what you could do is you could say, you know, you're going to enter here. You know the stop has to be a couple points below that bar right there, because that was the critical bar that had the multiple time frame support, which is right there. And then you just look for a 3-to-1 reward risk ratio. Let's bring this across. Right there, and a 3-to-1 reward risk ratio is roughly gonna be right here. Okay, so we're very, very close to that 3-to-1 reward risk ratio. If I did this correctly here, I think of my charts, the alert still hasn't gone off, so we're very close to it, not quite there. Once you get to that 3-to-1 reward risk ratio, you have an option to take off all your positions if you want. You could take off 50 or 75% of your positions. If you have some positions that you're still remaining when you get to that level, which is a 3-to-1 reward risk ratio, then you at least tighten up your stop so you don't go round trip. So that's another way of possibly entering this trade. But there's so many different ways. But the key is that one, this gap bar meets our criteria. You could tell based on pure price action that this broke resistances, and you could see it close higher than when it opened, and it still is above all the resistances it broke. Okay, then you surround that bar here. You could see that it has potential to keep on going up because it closed above this level here, which is what we're looking for. And then the next bar has a multiple time frame support, which you pretty much are looking to confirm and increase your probability of success. And at that point, we're setting up the trade. Okay, so hopefully that's clear. If not, you guys could ask any questions you want. You could email us here at info@eiicapital.com. Have a good day.